Hey everybody, welcome to Coffee with Chris. We are going to tackle a few more topics that we feel like are relevant to the market right now. The first thing that we're going to talk about is, I was recently reading this article from Dr. John Hussman, and he was talking about valuations change and market internals change, but we need not predict the trajectory of the wind. We just need the willingness to discipline and wisdom to adjust the sails. So, Chris, how do we have the wisdom, the willingness, and the discipline to adjust the sails when we're in a market like this that just keeps going up?
Thank you for such an easy question. I appreciate that. That is very kind of you, Dave. So I'm gonna come back and I'm gonna answer that question but I think there needs to be some framing of it. I'm try to do this kind of concisely. Okay. So we think about what the market did. In March, it sold off due to the global pandemic, the coronavirus, and the rolling economic shutdowns throughout the country. And so when it sold off, it oversold, it overtanked. And you got this overselling environment, and all of a sudden the market wants to correct quickly. So it did that through April and May. And in May, there's a lot of talk around the industry of it priced in a perfect recovery. So you remember about the time it was talking about this V-shaped economy or this swoosh-shaped economy. It was trying to price in the perfect recovery. Well, in June, it kind of realized it didn't, and it tried to level off. Then the market takes off in July and August into la la land again.
Yeah.
And so if we're looking back now, we're in the 6th month. So it priced in a perfect recovery 6 months out. We're in the 6th month. It's now looking back. And we're not getting the perfect economic recovery. We're still losing 1 million jobs a week, but we're gaining about 1.35 million a week. For a net about 1 million a month. And 1 million for a month, you can go back and follow those numbers from the August jobs report. Basically, you're treading water, but it's kind of shark infested waters. This is not a good spot to tread water in. It could be the beginnings of an economic recovery. It could not be. We don't know yet. So when we see that with the economy now, a market that's overshot it, now we can look back at the valuations. And so what a market valuation tells us is the value, the fair market value, not the price. The stock market gives us a price every day. The price is what you pay for it. Value is what you get. Okay, so when we look at the value of the market, and we look back over history, the market now is extremely overvalued. And you can see in this same report by Dr. Husband, and I know you read it, but that when you buy an overvalued market, your future returns are greatly diminished. And we'll be sure this week we need to produce that chart so that our clients can see it. Yeah. But you look at those valuations, you way sky high valuations. You look at coupling it with the stock market has really overshot its prediction of what the economy is doing, and the economy is going the other direction. Just it gives us a lot of data that tells us don't chase this market.
Right.
Which, emotionally that's hard to do. You look at Tesla, you look at Apple, you look at Facebook, you look at all those and you're like, oh gosh, I want some of that. Like, give me. No. Yeah. No, you don't want to chase this market.
Yeah.
So what internals are telling us is don't chase, because it's going to whiplash back and slap you in the face or worse. And so his statement on the discipline, the willingness, and the wisdom to adjust the sails, that's where data helps us, because we can look at the data and go, my emotions are screaming chase this market, but the data is saying run the other direction.
Yeah, so what this is really saying is if you take this in context or metaphorically, if you say, okay, the trajectory of the wind would be the trajectory of the market. We can't really control where the wind is going, but we can control our willingness and discipline to have the wisdom to be able to adjust the sails to what happens when. So it's something that we continuously have to track, because there are events like the coronavirus, which is a black swan event that nobody could have predicted, and maybe other than.
Well, politically, they claim that they can. Somebody does. Yeah, somebody will come out and say, "I predicted it."
Maybe they say that people knew about it, or we'll leave that to others to determine. But yeah, so that's maybe something we need to think about as far as just adjusting as we can.
Absolutely.
As we need to.
So talking about adjusting, the past week, Apple, Tesla, past 2 weeks have gone up, they've gone down. The market's gone up, they've gone down. So if we overshot going down, and now we've overshot going up, I'm guessing we're going to have to come back to a mean.
Should.
So
Yeah.
let's say Thanksgiving.
Yes.
What are we expecting by then?
Gosh, again, great fun question. I'm going to go
It's a
deer
good day.
hunting.
Yeah.
I'm going to eat a lot of turkey. By Thanksgiving, one of the dangers of giving ourselves such a short term to look at is we start to think that we should invest around the short term, and we're not short term investors.
No.
We do use some short term trending data to affect our trading decisions, but we're not short term investors, and so we usually don't make calls that early just for that reason. But you take all of the data that we just talked about that's in Dr. Huston's article. There's a lot of other data out there that's given us kind of negative points. But you couple that with we're still in a global pandemic. The argument of have we really flattened the curve in the U.S.? I don't know. I'm not an epidemiologist. The idea that we could be in the second wave of flu season. Again,
Right.
we're not epidemiologists, but that's just what we're reading. But you couple that with a presidential election that is going to be rough, to say the least.
I'd agree
And what kind of spin-off events do we get because of it? I don't know.
with that. Okay.
I do know that the market has overshot. And it's going to start trying to price that election in. It's already trying to price the virus in. If it gets it wrong, which the market's already proven that it got it wrong about the pricing in a perfect economic recovery, it's got to correct, okay? But
Yeah.
there's nothing that says it's got to correct by Thanksgiving. There's nothing that, see, data doesn't tell us timing, it just gives us data, okay? It rarely points to it's going to correct now,
Right.
right? Now, this is where charts are helpful. So far, we can lay it over 2000 and it looks just alike. That doesn't mean it's going to look like that same way before Thanksgiving.
Right.
But
Because
we'll
2000 took a long time.
It took a long time. Yeah. But I know this. There's, and I think we talked about this, how we did some of our personal accounts, same way we're running our clients' accounts. There's so much that could go wrong between now and Thanksgiving. I don't want to have much to do with it.
Okay.
I wouldn't want to be risking an awful lot between now and Thanksgiving on a market going up, because you're really taking a big risk, most likely for a small return.
So why make a few bucks when you're risking the farm?
Exactly. That's essentially it.
Okay.
Exactly. So
The risk reward's probably not worth it.
no, I don't think that the risk reward scenario has worked. And that's what we have felt since February. That you look at all of the data from the previous decade. We've had a good bull market. We've had a good run in the market. Markets cycle. And we get in these ideas, and we always do it at the end of markets, and it's worse in bubbles. When we get this idea, it's different this time.
Right.
That it's not going to correct. Apple's going to go up forever. Tesla is the next greatest thing that's going up forever. Or the fear of I've missed it. And that's a conversation we've had on Tesla before. You can go back and look at Apple stock in the 80s and you see how spiky it was, and in the 90s and how spiky it was. And then you see it start to gain ground when it came out with some real innovation that got traction. Well, that took them 2 decades at times. I mean, this is Apple we're talking about. And people look at Tesla and they go, gosh, I missed it. No. Be patient. Be patient. Be patient. You see a chart that goes, zoop, go, oh, that's pretty. I'm not going to invest in it. That's pretty cool, you know? Hate that we didn't buy it over here. Yeah, no, don't chase it now. Let it come back to you. And I would say the same thing in the stock market overall. We need to let it come back to us,
Right.
before we go chasing after it.
That makes sense.
And in the meantime, I mean, you can invest in bonds, invest in fixed income. This is where the Fed's piling money.
Right.
There's ways to have a good, steady, solid portfolio. And for anybody listening, that wasn't investment advice. But there's ways to do that. So I think a lot of times we think stocks are the only things we can invest in. No, that's not true. It's not true at all.
Yeah. Well, thank you for joining us again for another edition of Coffee with Chris.
We need to change the name. I mean, we are having coffee with Josh and Dave too. So it's coffee
we
with
could have
Dave, Josh, and Chris.
Coffee and dessert or lunch or whatever it is.
Right, right.
But this afternoon we have a webinar, and if you have not registered for that webinar, please go ahead and do so. The webinar is at 4 o'clock this afternoon. So we'll be covering some more information. We will have Clint Sorensen, our Chief Investment Strategist, on the call with us. And we'll be talking a little bit more about market strategies. And if you have questions about any of this stuff, please give us a call and we'll talk through. We'll set up a meeting and we'll help you guys in any way we can. Thank you.